Welcome to Markets Now. I'm Michelle Rook with Martinson Ag. The livestock futures pointing lower except for feeder cattle futures, although we did open higher in the cattle complex. And over in the grains, well, we faded some of the early gains in the corn, soybeans lower, and wheat still to the plus side. And Randy, let's talk about wheat market still making some new highs for the move here again, pushed by concerns about Russia's crop yet, right?
It is. I mean, again, now we've had the two big private analysts out of Russia come in and lower production. Once again, ICAR and Solvecon both lowered production. Pretty good numbers as far as Russia's concerned. Still worried about the drought in the Black Sea region, as we saw Ukraine's numbers also lowered. So I think that's what's really helping to give this market some strength and some push. We are also still seeing dry conditions up in the northern or in the southern plains in the U.S. and awful wet conditions in the northern plains.
Yeah, and there's a lot of talk that if we get the Russian number under 80 million metric tons, that market could really take off. And Matif wheat has really been driving the market overseas, hasn't it?
It has. I think that's been another one that the U.S. market's been paying attention to and watching pretty close. And you can kind of see that today we're kind of mirroring their activity that's going on over in the EU wheat. But we do have our own right now, some of our own concerns, and we're starting to get some reports of replant needed up here in the northern plains. Of course, with the dry conditions and harvest moving along in the southern plains, we have supply becoming available, but just how much is going to be kind of a question.
Right. So we finally got Chicago wheat over $7, and we had hit resistance several times there last week, and then Kansas City and Minneapolis wheat still higher here this morning. But from a technical standpoint, what are the funds watching here to keep this rally going?
Well, I think, like you mentioned, $7 in Chicago is a pretty strong resistance level. So if we can close above that, stay above it, that's certainly going to be a good support level for Chicago. Minneapolis, that's the one I pay more attention to. Right now, we're looking at Minneapolis at 765 or higher. Well, if we can stay above that, that's a 50% retracement. So that will be a pretty strong resistance level to stay above as well.
And it's been hard to stay above these levels because every time we get above them, then we get farmers selling, don't we?
We do. And I think that was part of what we saw this morning was more farmer selling that stepped in that kind of pushed the market down again. We've had a little better than $1 rally in the wheat market since their lows were put in this spring. It's certainly a time to be looking at moving some product.
Yes, and corn has been a follower of wheat, but this morning it looks like it's getting pulled down by the soybean market, or what's going on in corn?
I think it is being pulled down a little bit by soybeans, and I think they're a little bit worried also about just where planting progress is going to fall into play. That's going to be a big thing. I think the average trade estimate has it at 85% done. That's making some pretty good progress. It'll be interesting to see where the numbers come. But, again, we have good demand as we saw Mexico back in again overnight buying more U.S. corn.
Yeah, definitely. That should be supportive here this morning. So it's a little disappointing to see how the market is handling it. Let's talk a little bit about, you mentioned planting pace, but we've already got producers talking about replant, maybe prevent plant, and we're getting close to those last planting dates, aren't we?
We are, a majority of North Dakota, Minnesota, South Dakota has a last planting date of May 25th. That's gone already. There's a few regions or a few areas that have May 31st, which is coming up on Friday. And then, of course, the Eastern Corn Belt is June 5th. So we are fast approaching the final planting dates for corn. And up here in the northern regions, into Minnesota, South Dakota, and North Dakota, it's likely we're not going to be in a field for another week because of how much rain we picked up in the last 3 to 5 days. So that means that we're going to be looking at some more, some delayed plantings past the last planting date in every region, which I don't know if producers will do that. I don't know if they'll give up that 1% per day guarantee because this guarantee means quite a bit to them.
Yeah. So after the final planting date, then you lose. Explain that again.
For every day past the last planting date, you lose 1% of your guarantee. So if you plant 10 days late, you take 10% off of your guarantee, which is already reduced by your level of coverage that you buy. So I don't know if producers will do that or if they'll just look at taking prevent plant or switching that field to a different product or a different crop, which I think is probably what some are looking at because of the soybeans being down.
Yeah, no doubt. Is that why soybeans are down because we think we're going to get more acres, or is that lack of China confirmation in terms of all the export rumors, or did we just see resistance?
I think it's all three, but I think, the big one is I think they're looking at more acres because of the delayed planting and slow planting progress that we've been seeing. I think the other part is that, yeah, we had rumors last week of 2 to 8 cargoes of soybeans being sold to China for summer delivery, but no confirmation on it yet. So I think those are the ones that are kind of adding up there the most.
If we see acreage shift, how much you think we're talking? A million?
Well,
What?
yeah, I think a million. I think we could see a 500,000 out of, just out of Minnesota, North Dakota, South Dakota. Well, a million out of them between the corn and the wheat acres that aren't likely going to get planted. I think we could easily see a million acres being switched or prevent plant.
Also, talk about the seasonal, Randy, because that time span in terms of when we usually have that seasonal rally is kind of coming close to an end, isn't it?
For corn and for soybean or corn and wheat, it is. Normally, we top these markets in April and May, and this is the last week of May, and we're going to flip the calendar to June on Saturday. So we're kind of running its course as far as the seasonal tendency for corn and for wheat to see some strength.
No doubt. Okay, so let's talk about the cattle market. Cattle on feed report did come in pretty much as expected.
Oh, it was pretty much written by the expectations. Yeah, it was almost identical to what the expectations were. So, I mean, and that's not a bad thing. That is somewhat supportive to the market because it shows that, again, placements are below a year ago levels, so some of the lowest we've seen in years. Also, looking at it as far as the number of cattle on feed, I think, that also is supportive because it's the first month to month lower numbers in, I think, 8 years.
Yeah, and record cash trade last week in the north. So it's a little disappointing that the board isn't responding, especially since it's at a futures discount to cash is big.
It is. I mean, yeah, I was hoping we'd see a little bit more follow through, but I think the market is also waiting to see just where the domestic demand was for the Memorial Day weekend, because that's the official start of summer, and we're going to now see how the consumers' acceptance of our little higher prices are.
Right. We're also running into chart resistance too, aren't we?
We are. We've had a couple of really good weeks as far as the cattle markets are concerned. So we've made a really good recovery. Back up. I think we're up in the upper 75% recovery from the recent losses or the trading range. So yeah, we are bumping our head against some technical selling too.
No doubt. And Randy, finally, let's talk about hogs quickly. We've been on kind of a death spiral there. New lows for the move again this morning. We couldn't hold support. Do you think we'll continue to see pressure here? Are the funds liquidating?
I think they will continue for a little while here yet. I mean, if we can start seeing, I think, a little bit better domestic demand or a little bit better, exports, that might help a little bit. But I did see the cold storage. There was a little bit of increase, I believe, for pork in the freezers. That, I think, is causing a little bit of trouble with a little bit more production than what we were expecting. I do think we'll work through this, though, especially if we see the consumer push back away from beef. They're going to go to pork.
Okay. Thanks so much. Randy Martinson with Martinson Ag. That is Markets Now.